Good afternoon, everyone. I'll now call the Finance and Responsible Governance Committee meeting to order. It's 6:03 p.m. Welcome to Finance and Responsible Governance Committee meeting. This meeting's being held in person and electronically in accordance with the Municipal Act. Today, we don't have any public meetings or open delegations. The first thing that we have is one presentation. The presentation is concerning the 2022 audited consolidated financial statements. Before we start, I'd like to change the order of business to have the agenda item 7.1 listed under reports of officers of the corporation concerning the 2022 audited consolidated financial statements to be considered at the same time as the presentation for members of committee and council in attendance to ask questions together. Are members of committee in agreement? Great. So we'll move to the presentation. I'll now call upon Melissa Mifsud. I apologize if I butchered that one, Manager of Accounting and Financial Reporting, to provide the presentation.
Thank you. Good evening, Chair Harvey and members of committee. It's been a number of years since we've done a presentation going over the city's financial statements, so we thought it would be a good idea with the new term of council. Our objectives today are to go over some municipal finance basics that will help you understand the financial statements and then provide an overview of the 2022 statements. If you don't have a financial or accounting background, or even if you do, some of these accounting and financial statement concepts can be difficult to understand. So please stop me if you have questions at any time. My goal is to give you a general high-level overview and not get too far into the weeds. It will be helpful if you have the financial statements open and follow along with them, which are in Appendix A of the staff report on the 2022 audited consolidated financial statements. The first concept I want to cover is Canadian Public Sector Accounting Board Standards, commonly referred to as PSAB. All governments, school boards, and hospitals must follow PSAB. Accounting standards specify how transactions and other events are to be recognized, measured, presented, and disclosed in the financial statements. This can result in financial statements that look different than how you typically look at city financial information, which I will get further into in the coming slides. The city's financial statements must be done on a consolidated basis to capture all entities the city controls, so they include the city itself, the police, library, BIA, and our investments in Barrie Hydro Holdings and the airport. The second concept I want to cover is reserve and reserve funds and their impact on the financial statements. Reserve and reserve funds are monies set aside to fund future capital and operating expenditures. It is important to understand the different types of reserves and what they mean in relation to PSAB. First up are obligatory reserve funds. These funds are received by the city with external restrictions on how they can be used. Development charge reserves, cash in lieu of parkland, and gas tax reserves are all obligatory reserve funds. These funds are a deferred revenue liability on the statement of financial position, which is on page 5 of the financial statements, until they are appropriately used, at which time they can be recognized in revenues on the statement of operations on page 3. Then there are discretionary reserves and discretionary reserve funds and reserves. Discretionary reserve funds are established by a council bylaw for a specific purpose. Our user rate reserve funds for water, wastewater, and parking are discretionary reserves. Reserves are funds set aside by council for an intended purpose, but are not restricted. Examples include the tax capital reserve, reinvestment reserve, and tourism reserve. Discretionary reserve funds and reserves are funded through allocations of amounts that have already been recorded as revenue for PSAB purposes and therefore form a part of accumulated surplus. For PSAB purposes, we refer to these as accumulated surplus reserves. As you can see from the graphic, reserves and reserve funds can interact with both the operating fund and capital fund. When there are transfers to or from accumulated surplus reserves, they are not true revenues or expenses for PSAB purposes, which can contribute to why the financial statements look different, which we will get into on the next slide. The purpose of this slide is to show whether items from the operating fund and capital fund meet the definitions of revenues and expenses per PSAB, to highlight why the PSAB statement of operations can look so different. Revenues from external sources, such as property taxes, user fees, and grants in both the operating and capital funds, are revenues for PSAB purposes, as are contributions from obligatory reserves and other deferred revenue. As discussed on the previous slide, contributions from accumulated surplus reserves are not revenues for PSAB purposes because the funds in those reserves previously went through revenues on the financial statements, so you can't count them as revenues again. Debenture proceeds that are revenues in the capital fund also do not qualify as revenue for PSAB. They end up on the financial statement of position as debt that we must repay. On the expenses side, in the operating fund, we have our regular operating expenses, which qualify as expenses for PSAB purposes. Then we have some operating expenses that can be capitalized. Sometimes we have minor expenses that qualify for capital assets per PSAB that are purchased through the operating budget instead of a capital project. These items end up on the statement of financial position as assets. Then we have debt principal repayments. These are not expenses for PSAB as they draw down our debt balance. Debt interest payments, however, are PSAB expenses as they do not draw down our debt balance. We then have transfers to accumulated surplus reserves, which are not expenses for PSAB purposes, as previously discussed. On the capital side, within capital projects, there are expenses that do not meet the definition of a capital asset per PSAB and must be expensed in the statement of operations. Then everything else can be capitalized and ends up on the statement of financial position as a capital asset. Finally, we have other adjustments just for PSAB purposes that don't appear in our operating or capital funds. Examples include amortization of capital assets and changes in liability calculations for post-employment benefits and landfill closure. While you don't need to fully understand each of these items, I hope I've given you a sense of how different the PSAB financial statements can be from our operating and capital funds. Now, moving on to the overview of our financial statements, we'll start with the statement of operations and accumulated surplus, which is on page 3. This is the equivalent to an income statement in the private sector. You'll see that we've got a budget column and then the 2022 and 2021 actual columns. The budget column combines operating and capital budgets and adds amortization and post-employment benefit liabilities. More detail can be found on note 18 of the financial statements. In this statement, revenues are grouped by source, then expenses are grouped by function. We then come to our key measure, which is the annual surplus. The annual surplus is our revenues less expenses for PSAB purposes. Because of all the PSAB differences discussed on the previous slides, you'll notice the annual surplus is much higher than the operating budget surplus that was reported through the 2022 year-end report a few weeks ago. On this slide, we'll reconcile the budget surplus to the PSAB surplus. If we start with the city's total operating budget surplus of 5.8 million, which includes the tax, water, wastewater, and parking rate surpluses, there are many adjustments to get to the PSAB annual surplus. You'll see our largest ones are for contributed capital assets, contributions and transfers to or from accumulated surplus reserves, PSAB revenue recognized in the capital fund, debt principal repayments, and amortization of tangible capital assets. Next, we have our statement of change in net debt on page 4. This statement explains the difference between the annual surplus and the change in net debt. This statement starts with the annual surplus, then factors in many items to reflect total spending. For example, amortization expense is added back because it's not a cash expense, while the cost of acquiring tangible capital assets is included. Net debt occurs when the total debt to be repaid in future years is more than financial assets at year end, which we will look at on the next slide. It indicates future cash flows required to finance past transactions and results from spending that consistently exceeds revenues raised, paying for today's spending with future dollars. If the municipality has sufficient future revenues to repay the principal and interest on debt in the future, then a net debt position does not necessarily mean the municipality is in financial difficulty. Next, we have our statement of financial position on page 5, which is the equivalent to a balance sheet in the private sector. It is a historical report of the city's financial position at year end. First, we have financial assets, cash or items that can be converted to cash in the regular course of operations. Next are financial liabilities, which represent future cash outlays for transactions that have already occurred. Then we have our net debt number discussed on the previous slide. Then we have non-financial assets, which are longer-term resources that cannot readily be converted into cash. Finally, we have our key measure, accumulated surplus. Accumulated surplus is the amount by which all assets exceed all liabilities. A surplus indicates the government has net resources, both financial and physical, to provide future services. Our last statement is the statement of cash flows on page 6. It describes how cash was generated and used during the year. Sources and uses of cash can be analyzed to assess whether future cash resources are sufficient for sustaining activities. Finally, we have the notes to the financial statements, which provide additional information and context to the various statements we just went over. I won't get into the notes, but if you haven't read them before, I encourage you to do so, as there is a lot that can be learned from them. These financial statements were audited by Deloitte, and Deloitte's report on the 2022 audit is in Appendix B of the staff report on the 2022 audited consolidated statement in tonight's agenda. We have Pina, our audit partner from Deloitte, here tonight, so we can take any questions on either my presentation or Deloitte's report, if you have any.
Great, thank you for your presentation. Do any members of committee have any questions? Mayor Nuttall.
Thank you for the presentation. And one of the questions that I have is when it comes to land that's owned by the city of Barrie, would that be covered under the non-tangible assets viewed as a longer term asset?
Correct. They would be included in your tangible capital asset balance.
And when we're looking at the values, do we guesstimate the values of those properties based on their current zoning? So if it was a park, it's going to have value as a park, and if it was an industrial piece of property in the south end where we don't anymore, but the city used to own a bunch of industrial lots, they would be valued at that.
Through you, Chair Harvey, the land is valued at the time it goes on our books. So if it's adjusted to the zoning or whatever is adjusted after the fact, it cannot be adjusted in the financial statements.
Interesting. So when we look at the total assets that the city has, we're essentially very conservative in our approach to what the total assets of the city.
For you, Chair Harvey, yes, potentially the land could be valued at the book value that we purchased or obtained it at, and it could have could be much higher now.
Okay, thank you.
Great, thank you. Any other members of committee with any questions? Councillor Congo.
Thank you. Through you, Chair Harvey, to staff. I liked your approach to managing this type of information in the presentation style. So thank you. That was nicely done. I guess building on Mayor Nuttall's question, thinking about just again, like market rate or book value of property, how does, would we ever, and do municipalities ever, especially with the state of change of real estate, go through kind of a review or analysis of value? And while it doesn't hit financial statements, so this might not be a fair question to you, and maybe it's better directed to Mr. Miller, but I'll let you decide that. How does this play into our standards and ratings when we look at assets and or our ability to pay down debt over time? So if it's not recorded around, I would call it an actual asset representation around costs that we could potentially liquidate if we're in a situation, how does that factor in between financial statements and reporting to how we're viewed around our credit rating?
Through you, Chairman Harvey, to Councillor Kunkel, great question. So I'm going to refer to the accountants, myself being one of them, as the bean counters. The rules, the PSAB rules that are created by the accounting board dictate how we report them. So one of the criticisms of financial statements is, generally speaking, they're based on historical values. Point in time when you buy them, you buy the land, that's when you record it. And that's generally the way it gets maintained on the statements, unless you generally change the use and make investments to it. The rules are changing. International accounting standards are pushing more towards recognition of market value. But for today, it's on land would be on historical costs. From Standard & Poor's point of view, they do start with the financial statements. Generally, they also look forward. So financial statements are a historical point in time where you're at. When they look at them, they look at our existing debts, and then they look forward. And really, they focus on our ability to pay debt and other liabilities as their main focus on the cash view point of view. Municipalities generally don't have a lot, are not considered to have, apart from cash and investments, a lot of liquid assets, meaning other than perhaps land or a few other items on the balance sheet, we don't sell generally, roads and pipes and that sort of thing. So they're not really concerned, or they don't look at they look at our overall assets, but the capital asset piece that we own is not really a huge factor into their assessment of our ability to pay our debts. So I guess the difference really is it's more forward looking. They start with the financial statements and then they look forward as, can we pay what we owe?
If I may, a follow up. It also brings to mind when we look at assets, what's an asset versus what's a liability. And if we look at the financial statements, it's kind of saying, what's our standing? Can we pay for what we owe? Are we running a deficit or not? Versus then a different picture of assets. Between the two, what would drive our strategy? So if we were ever going to look at real estate being a good market for us to be investing in as part of our portfolio, what would be the tipping point to look at that? Would we see it as a liability, or in a climate like this and where opportunities come up, or where municipalities acquire property or not? What factors into that? Is it the financial statements, or is it more about return on investment long term and more tied to our financial strategy around our investment board?
So I'll take that one. Through you, Chairman Harvey. So one item to look at from the financial statements in terms of point in time is Melissa described net debt. So our net debt, I think it's $81 million at the end of 2022. And as Melissa was explaining, it's really indicative of you're paying, that's accumulation of assets, liabilities, and where we stand today. So right today, if we were just to read this from a financial, analyze this from a financial position, you would say, okay, you got $81 million. The city has to fund going forward. So what does that represent? The $81 million, we're investing a lot in infrastructure. We're inheriting assets. We have to maintain them. So a growth municipality like the city of Barrie that has a lot of, we provide our investments in water and wastewater. Most growth municipalities have a net debt position because we're continuing to grow and invest. So it's not necessarily a bad thing, but you have to remember it's something we have to finance. So you would almost start as step one. That's your financial point in the sand where we're starting. To get to where we go long term, if the municipality wants to invest in land with the hope that you're going to have some objective, either increase value or encourage industrial development, you have to look at a whole holistic concept, right? So do you have enough cash to buy that land as well as maintain your current capital infrastructure? And that's where it's more of a forward-looking piece on the cash flow. When you look holistically of everything, can we afford to do that? Or if we're going to take that approach of investing in land, then perhaps we have to scale back in other works that we're doing. So I hope that helps. Again, the financial statements are a point in time. They show you where we are and where we're headed, but it's also the forward-looking cash flow analysis and budgets that are important to help determine the strategies of where the city wants to invest.
No, that does. Thank you, Mr. Miller, and thank you, Melissa. Great presentation. And yeah, it was helpful to look at current state, but also then tied into the conversations we have at budget time. No further questions.
Great, thank you. Any other members of committee with questions? Any non-members of committee? Thank you for your presentation. Hopefully the public were watching too, because it does get confusing for people when you're so used to looking at corporate statements, because obviously municipal statements are very different, especially when it comes to surpluses, including things like sidewalks and stuff. Nobody would ever think of that as being part of a surplus, and you're just thinking about cash in hand. So thank you for your presentation and clearing up. And I'll be quite honest with you, there's little aspects of it that I'm almost a little more confused about than clear, but I'll follow up with you down the road just to kind of clear up a few things when you started talking about the different surpluses and the rationale around them. But thank you for your presentation.
Thank you.
So with that being said, we've brought forward 7.1, the 2022 audited consolidated financial statements. That the 2022 audited consolidated financial statements attached as Appendix A to the report to the Finance and Responsible Governance Committee dated May 17th, 2023 be received. Can I have a member of committee put that on the floor, please? Councillor Congo.
I think I'll put that on the floor as printed.
Great, thank you. Is there any discussion? All those in favor? Great, it passes. The next item is referred item. There's one deferred item this evening concerning the memorandum from Ms. Schlichter, Director of Economic and Creative Development, from the circulation list dated January 25th, 2023, concerning an update on the permanent market. Can I get a member of the committee to put it on the floor? Councillor Congo.
I'll put it on the floor as printed.
Great, thank you.
I also have a deferral.
Okay, go ahead.
Thank you. Is that preempting anything, Mayor Nuttall, you want to speak to? Okay.
No, that's what I was gonna.
Okay, cheers. So I'd like to table a deferral of this item to a future Finance and Responsible Governance Committee. And I can specifically read that out if needed.
Madam
don't
Clerk,
think so.
is it required to read it fully out?
No, she can just, Councillor Congo can just defer it to a meeting in the fall of 2023, and we can work with this team to see what meeting it would be appropriate to bring it back in.
Okay, great. Thank you. Is there any questions from members of committee in relation to that? Or I guess it's a deferral. We can't really do it anyway. I'll call the vote. All those in favor? And I'm in favor also. It passes. We've already dealt with 7.1, so we're at adjournment at 6:26 p.m. and that'll be the end of our